This is Andrew Stotz of Stotz Investment Research talking about the Philippines today, which has solid fundamentals, but unfortunately, it's a bit expensive. All right, let's take a look at what's going on in the Philippines. Remember, there's 4 different things that I look at when I'm reviewing a country. First thing we want to start off with is the economics. Well, if we see the Philippines, we can see that GDP over the last 4 quarters is 6.79%. That's pretty darn fast GDP compared to most countries right now in the region. And what we can see is private consumption and investments are the main drivers. In fact, the big laggard is net exports, which has been having a big contracting impact for a while. So overall, we can say the domestic economy is pretty good. Consumption is strong and companies are investing. Now, sorry about that. Okay, next, let's look at the upper right-hand corner and we can see some information on the country. Population about 100 million and the GDP per capita is about $3,000. Market cap to GDP is still a pretty low 90%. And what we can also see is that there's 243 listed companies on the market. Relatively small market compared to some of the others in the region. Now, price momentum has picked up recently, and we can see that in the chart. But also what we can see is that the country is expensive on a PE basis, about 20 times. For EPS growth, that's about roughly analysts expecting about 4%. That's pretty slow. Now, they are expecting it to come back in 2018, but I would say analysts tend to be optimistic. So at 3.9, it could be that the Philippines doesn't have any earnings growth in the stock market. If we look at the ROE, it's not bad at a 12.3% expected in 2017, but the price to book at 2.4 is pretty high. Also, what we can see is dividend yield is relatively low to some of the other countries, such as Thailand, which is at almost 2.5 to 3% dividend yield. Let's move on and look at the Stotz 4 elements, the rank of Philippines relative to other countries in Asia. So let's get on with it, and we can see that the country is only moderately attractive. We can see that the blue bar is only at a 5. If it was at a 10, it would be super attractive. And how are the fundamentals? Well, that's the good news, is that the fundamentals are rated at an 8, with 10 being best. So the country has the 3rd strongest ROE in Asia in the past 12 months. That's pretty great. The downside is that the market is expensive. The PE is high and earnings growth is relatively low. Now, momentum shows that price momentum has picked up, but earnings momentum has not. So one of the risks of investing in a high ROE country is that it can't pick up the ROE that much, and therefore you don't get earnings growth improvements from an improvement in margin. Now, let's take a look at risk. Risk is ranked at a number 5. Remember that I look at price risk and balance sheet and fundamental risk. Finally, let's now take a look at the sector performance and what's happening in the sectors. Well, first of all, the country's top 3 sectors, well, industrials is 26% of the market, financials 23%, real estate 18%. Whoa, we can see a lot of sectors up by 13% over the last 3 months. That's the telecoms, industrials, and consumer discretionary. In telecoms, PLDT, the massive telecom companies there, is up 15%, even higher than the overall sector. And if we look at the worst performer, well, the worst performer has been the utilities and the materials sector. Under the utility sectors, Abortits, I probably just messed that one up. Power company, 8% down. All right, so how do you become a better investor? Well, get access to additional research and articles by joining our free newsletter at becomeabetterinvestor.net/join, and I'll see you there.